Turn on my do not disturb. God, I really gotta get some new pajamas. Let's see. Hit the thumbs up button. It helps. I think it helps. Let me put on live chat. Okay. Put my headphones on. I don't know. Do I have? Morning, Joe. Full disclosure, you won the. I like salmon more than that fish that Brian caught. Still couldn't kill it, though. Morning, Nevin. By the way, I was doing a lot of research into AIQ yesterday. I like this. I really like this. AIQ. Look at those holdings. I mean, the top 10 holdings. Morning, Brian. I was just telling Joe I like salmon more than the fish that you caught, but eating wise. This is, I mean, look at those holdings in AIQ. I love this. Now, I don't know that. What I was trying to figure out yesterday was, is AIQ overvalued based on its assets? And I couldn't figure it out yesterday. But AIQ, this and XLG, I think, was the other one that I had. Yeah. This and XLG are my two favorites right now. And both are just outperforming. Let's see. Let's go to Seeking Alpha. And, it's taking up a lot. Let's do. I don't think AIQ is going to be. We'll put SPY. Let's do XLG. Oh, I just want XLG. Ugh. Why? What? Oh, I have XLG in there. Oh, okay. AIQ. I was going to say, why won't it do? And let's put SPY. Oh, you know what? We'll put QQQ in there too. And update chart. Year to date. I mean, XLG you can't argue with. AIQ is it's not a clear winner. I mean, QQQ is at 37%. AIQ is at 38%. That's just year to date. You look at 1 year. AIQ is up 35, QQQ 31. Let's see. I don't think AIQ was around. Oh, it was. 2020. This one's up 39%. QQQ up 52%. So XLG is up 47%. So XLG kind of beats AIQ on a longer term, but 1 year, year to date, short term, AIQ beats it. So that's what I was looking at yesterday. A lot. Trying to figure out, okay, which one do I want? Because kind of like I said, I mean, the AI train, it's still going. Woo woo! Let's go to scanner. Let me see. I've got to reorganize my notes as well. People have overwhelmed me on the private Facebook group. There were a lot of questions yesterday. XLK secondary cross up. Wow. Pan W, another cross up. Pan W. IGM, which is one that I like. That's one that I got into when I couldn't buy the ARK funds. So I like IGM. It's not in the core portfolio. I don't have too many ETFs other than VOO, I think, in the core portfolio. But there's several that I'm going to put in there. I think it's VGIX, one of the other Vanguard ones. That's international exposure. I think, having a core kind of balanced portfolio, I think, in that one might help a lot of people. Devon Energy, it closed at under 50. It's over 50 in pre-market. I mean, it shot up to 52 yesterday. Moderna cross up. What's that about? I'll put it in there. It's a good one to trade if you think it's got some chutz, as the people in Israel say, the chutzpah. I think chutzpah. I think that's the way you say it. Energy names. By the way, if you listen to My First Millions podcast, which is one of my favorite podcasts, by the way, you'll know Sam got a Tesla, and he's doing his first extended road trip from San Antonio to St. Louis, 15 hours, driving his dog, and he posted some stuff on Instagram yesterday. I'm looking forward to his review because it sounded like he enjoyed stopping every now and then with his dog, which is what I do. I mean, the road trip's not for everybody. If you're looking from getting from point A to point B, by the way, good morning, Q-tip. If you're looking from getting point A to point B as fast as you can, yeah, an electric car is not your thing. There are other benefits to an electric car that I actually like more, like leaving home with a full tank of gas, never having to touch a gas pump that disgusting people have touched, even the chargers. Wow, no energy names. Even the chargers, I carry baby wipes and in my car, and your boy uses hand sanitizer. Wow, TQQQ got another cross up. And you VIXY. The VIX has got to go up at some point. What's TECL? It's a levered ETF. Bull 3 times. Oh, the technology. Holy crap. Look at that one. I mean, God. This is the triple levered technology. Could you get any better? I mean, honestly, down here at 32, you've almost doubled your money in a couple months. That's great. Larry! That's crazy. TCL. I'm going to say triple levered technology. I should put DPST in this. Let me see if I have DPST in this. Do I have DPST? I don't have it in my triple levered ETFs. No. Oh, I do have it in DPST. Okay. DPST in my mind, I think I've, somebody asked me, do I get? Oh, I do have one. Let me see. PPI coming. If you get a chance, ARDX. Highway Jones asked me about TGTX. Zim for Richard. Paul asked me about UNH and HUM. And then someone added, can you look at CI for that one, CRISPR? And Disney and Carvana. NVIDIA. Oh, it was yesterday that they asked me to look at it. SMCI, Alta, AMD. Okay, I got so much to freaking talk about. I'm gonna take these, and we're gonna put these up here, and then we're gonna take these. Sedge, Mara, copy, or no, we're going to cut, and okay. I got a lot. I like this one, DPST. If you didn't know, but TECL, whew, I should have been looking at this one forever. I mean, this one even, God, June 8th, it pulled back to 45. You got your 10%. By the way, PPI, Producer Price Index, which is inflation for producers, the cost of actually making goods, that kind of even went down better than CPI, which should have an increased faster reduction of inflation. So I can't imagine the Fed doesn't pause. By the way, Cleveland Cliffs at 17. I need to buy more of that. I need to put this one in here. Just when it seems like it can't get better. I mean, Devon energy's getting killed, but commodities and materials, they're doing. I mean, look at that bounce on Cleveland Cliffs. Okay, levered ETF. I need to save that. I talked way too long yesterday. Way too long. But I will tell you, and I will thank you guys. I think 80 people showed up and actually did a review on Spotify. So thank you to you guys that did that. If you're listening here live on YouTube, which you're probably not. Growth. Vanguard Growth got a cross up again. We'll put that in there. Why not? Because if you're looking to get into growth, I think it's a little too extended, to be honest. But spider sectors. XLC, communications. Huh. That's an interesting one. I mean, that's been going. Listen, you're not looking for. This is not typical behavior for a sector going from 57 to 64 in a month. I mean, that was May 5th. You're on June 14th, and it wasn't even beaten down. It kind of is, but let's look at the long term on this one. Kind of got it under the 200-day, so I guess it was beaten down, but that's the kind of stuff you really want to look at, by the way. Morning, Sherry. Hey, Sherry, by the way, I will thank you, but I wasn't able to email you for some reason. I think I lost your email address, but thank you for the tip yesterday. I appreciate it. Yesterday was a heavy tip day, so I must have said something good, or people are on day 14 of Tesla, or they like the Oracle earnings, or they liked NVIDIA earnings. I mean, let's chalk up the wins of recent. I mean, kudos to everybody that's listening, because I've taken some of my advice, but not all of it. So I'm glad when people make money. That makes me feel good. And remember, only tip me when you make money. I don't care about it. If you lose money, I feel bad. Ooh, ARC W, ARC F. Fastly. QuantumScape. DraftKings got another cross up. Fastly. See, that one's just too extended. Okta. You know what? Okta's coming back to fill that gap. QDEL. QuantumScape is up 3% today. That's just too messy. I think that's the LiDAR company, isn't it? Let me see. Auto parts. It's lithium batteries. I knew it had something to do with EVs. This is the one I think that's making a solid state battery, if I'm not mistaken. They're losing money. I mean, they're up 32%, but they're losing $426 million. They have cash on hand of $2, so they have $800 million. So they probably have 2 more years before they actually have to raise. DraftKings. Oh, look, Sherry. SMMT. 192. Danger. Here's the good news of Summit Therapeutics. I mean, your 50-day. Hold on. We have to move in closer. Your 50-day is right here. It's kind of capitulating, but with that move up, it should start to move up. Your 200-day is still going to move down. So if you get to that 200-day, I mean, you're at $2. 25% move. That's great. That's fantastic. I'll put SMMT because it crossed up. It's crossing up at a. I mean, that cross up down there at about $1.50 was the best one. We'll put that into there. Now let's go to the Dow 30. Oh, I need to. Do I want to do ARC? There's going to be so many ARCs that are going to. ASML. Vuzi. Sand. I think, let me see. Is my fireside chat with Kathy Woods today? From ARC. Calendar. Yes, it is. Kathy Woods chat at 3 o'clock today. Let's see. Let me scroll down here. AKYA. I don't even know what it is. Akoya Biosciences. Let's put it into the strategy tester. This one, I can kind of tell that you'd probably be better off on the 65-minute. So in the 4-hour, it just got $6.50 cross up. It's a falling knife. Probably not great, but if it's rebounding, the RSI shot up to 66. Let's see, AKYA. Akoya. Boy, it's hot in here again. I don't think it's the light. I think it's just the lack of airflow in here. They're losing $73 million, but they have a market cap of $247 million, so it's not crazy. They're down 31% year-to-date. Target price is $16.14. Initiated UBS with a price target of $14. That's the only one this year. Everything else was last year with like $16 and $19 price targets. Back in 2021 when the market was crazy, this was $23, $28. So take the 16 with a grain of salt. Even the 14 I would take with a grain of salt. But insiders pour into these two stocks. JP Morgan says they have 170. There's a good tip ranks. You can see here, director, 10 million, 1 million, 600,000, 100,000. This is all on June 12th. So it's from 1, 2, 3, 4, 5, 6 different people have poured into this one at $5. They all got it at $5. Don't ask me how they got it at $5, but they all got it at $5. Let's see. And what date was that? That was June 12th. June 12th. So let's see. June 12th. We will go back. That was 2 days ago. June 12th, it opened at $5.38. Low was $5.15. Moved to the afternoon candle. Well, that was the afternoon candle. June 12th. Open at 5:38. Low was 5:15. And that's the morning candle. We moved to the afternoon candle. Why is it I can't? There we go. June 12th, afternoon candle. See, this is what's crazy, Sherry. So, open at 5:42. I mean, the low was 5:34. It never hit $5 on, other than maybe after hours, pre-market. Maybe these guys got it pre-market. But look, I mean, it's all at $5. So my guess is that this was pre-market $5 because the Friday before June 12th, it never even got down to $5. Got down to like $5.15. I would say you're probably okay in this one, not knowing too much about the actual business, because it does look like you're having a volume play, maybe because of the insiders. Their earnings, losing 47, losing 47, losing 50, losing 49. Maybe these guys already know that they're not going to lose 49 cents. Might be interesting. Yeah. I mean, usually when this happens and news starts hitting and when you start to see with something with a $247 million, which, by the way, is nothing. This is a micro cap. It is crazy small. $247 million market cap. And all of a sudden, from June 8th, they announced a dilution. That's what it is. Here, Sherry. The reason they got it at $5, public offering price of $5 per share for gross proceeds of approximately $43 million without giving effect to the underwriting discount and commissions, as well as Okoye has granted the underwriters a 30-day option to purchase up to an additional 1,305,000 shares of common stock at the public offering price. The closing of the offering is expected to close. Okoye intends to use the net proceeds from the offering. So, $5 is your bottom. They basically did a dilution at $5. And so the way these guys got $5 is because this was all the additional shares. So they did 8 million shares. This dude, Raffin, had the opportunity to buy into the 8 million shares. He bought 2 million of the 8 million. So, let's see. He owns Arroyo and Lumo. So, it's an interesting one. I think, it definitely tells you your floor. Doesn't tell you your upside, but it tells you your floor. So, but let's go back to our scans. Okay. Scans, and we did ARC Holdings. I didn't see anything in there that I really liked. So let's go to the big cap. I think there was a question yesterday. I think it was yesterday. Hey, I'm in all these big cap stuff. Can you tell me some small cap or some stuff like that really has growth? Nah. What's working works. I mean, with the big cap, the large cap, you're not looking at rug pulls. You're looking at quality stocks, good companies with good management, with good earnings and good products. You're not looking at rug pulls. So if you want that huge growth now, I will tell you, there's something crazy going on with healthcare in particular. UNH is down pretty big in pre-market, down 6%. Oh, that's what it is. It doesn't say. Here's why it declined. Story continues. It doesn't freaking tell me. Initial rate proposal for Medicare Advantage managed care were more negative than hoped. It's Medicare. Here, I'm going to put this in my notes. It's basically Medicare. Concerns. I don't think I do think that they're growing out, but I think this makes more sense. This particular article, United falls as seniors catch up on surgeries, leading to higher costs. I don't think it's just seniors. I think it's just overall healthcare, and I think people are taking healthcare and using it a little bit more. Yeah. I think it's catching up with them. But United Healthcare being the biggest insurer, there's two things that are leading to it. And my note is Medicare cut concerns and higher costs based on seniors catching up with surgeries, and other care are catching up with UNH and other managed care. Here, if you look at UNH, and I'll look at a long term of UNH for you. You can see. Remember how we were in that? This was SPY on the weekly, where you had an ascending wedge and a descending wedge, and you just didn't know where the stock was going to go. Well, it's broken down, so you're going to open up at 462, down in this neighborhood, and it doesn't bode well for the stock, but I do think that you could probably, look at that, and you're going to open up down here, right at the bottom of that descending wedge. So in my mind, again, I only added about 5% so far. I'm not fully in my total allocation to this one. I may go more, because do I think that United Health is in a better situation than it was in June of 2022? Absolutely. Do I think it's in a better situation than it was in December 2021? Absolutely. Do I think it's justified way up there? That's questionable, but they're growing. They got a 1.53% dividend. It's down 7% year to date. It's going to be down even more when it opens up today. I stick with, and I think I said this yesterday, I think I'm going to bring that down to about 490, where you swing it. But I think this one gets hit on higher costs. I don't think that people all of a sudden, do I think that this $6.26 that they made per share is going to go down to $3 based on increased cost over this quarter? Nah. I mean, you can see here, $7.12 per share. And then they kind of went down. It's just kind of all over the place. But I do think if they, for some reason, announce that, there's Medicare reductions and stuff like that, you're just at the whim of, Medicare with managed care and the government. And you know what the government wants to do? They want to cut costs. So let's get back to the scans. Dow 30, Cisco's the only one. And trust me, I am not an expert on healthcare. I am much more an expert on technology, but I just know from investing in healthcare, holy shit. There were a lot of stocks here. I just know from investing in healthcare before, any managed care stuff, it's Medicare. I mean, whether you like it or not, we are a managed, we should have universal health care. And it really isn't that much, because if you go to universal health care, it actually costs our country less overall because people pay for their health care. Right now, even in healthcare, you have a shortage of doctors, even in a managed care situation. Texas Instruments is interesting. I mean, it could get back up here, but Rivian is being replaced in the S&P, I think it is. Let me see. So I don't think listen, the valuation of Rivian is just crazy. But if Rivian announces that they go to the Tesla charging standard, boom. Yep. Let's put Rivian in because I do think that this could see a pop. Let me see. NASDAQ is dropping. Rivian. The EV stock? On Semi. Okay. On Semi is. That's ON, I think. Yeah. By ON. I think it's on. ON is it? Let's see. Yep. On Semi. And they're going to get a bump. They didn't get a bump today. But if Pan W, we have Lucid. I will not invest in because the only way Lucid actually goes up is if the Saudis actually buy it. Monster Beverage. I mean, that's just had a huge run. C-Scaler. It's crazy. I think we talked about it when it dipped like this. Down at 88. I mean, that's May 3rd. That's 1 month ago. And you've doubled your money? I'm going to put that one in. Crazy. Cisco, Fortinet, same kind of thing. Not as crazy, but same kind of thing. ASML, CDNS, and Broadcom. I tell you what, Broadcom's going to come back up there. It's not a crazy move. I mean, it's just coming back, but it's going to come back up there to 913. So, It's crossing up again. I'll put it in there. I'm not buying it personally, but I just there's other chips that I'd rather be in. But it's probably one of your best bets in the chips to just continue doing it. Okay, let's see. Oh, United Health actually warned about higher costs. Let's see. Jim Cramer's on CNBC talking about the United Healthcare. That's why I moved my headphones. Bristol Myers, I'm not a big fan. Cisco, Texas Instruments, we talked about. He is talking about, well, for my charitable trust, we're going to buy this one. GE Healthcare. It's probably not a bad one. I mean, he's right, and I'll bring it up, but he says, hey, higher cost means better for device manufacturers. And GE Healthcare is one with MRI machines. So, and technologies. That might, GE Healthcare. Okay, I got so much crap to go over. There's so much here. Okay. Bum, 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 bum. Holy shit, I got a lot. Okay. Let's start with SPY. We're going to go back over to the strategy tester. Bum, bum, bum. Let's see. In our core portfolio, Apple probably gets under 180. Amazon 126. Cleveland Cliffs is up at 17. Kudos to anybody that got into Cleveland Cliffs at 15. Disney 94. I said Disney in the low 90s. I thought it was a good one. Coke is almost under 60. NVIDIA at 405. You'll be able to buy it under 400 again if you want to sell it for a short-term game. Kudos to you if you want to. PXD at 203. I still think that's a great one. Shopify at 63. You'll be able to buy it under 60 again. Target at 129. I think anything under 130 is probably a great long-term play. I'll look at Fubo, Sherry, real quick. I probably should put XLK in the... Let's look at Fubo. Fubo's up about 1%. You got that wedge. I mean, it's broken above this wedge, and it's going to cover that gap up to 225. I mean, it's at 223 right now. It's going to cover the gap. I'd be semi-afraid after that gap. I mean, you could. This peak right here at about 323 isn't nuts. But if we bring this volume shelf, let's just bring it back here. there's no volume. You know what? We'll bring it back even further. We'll bring it back to September 2022. September 2022. You still have some people holding it up here between 346 and 354. The support level looks like it's about $2 right here. 247 million shares are held right here. 246 right under it. So it's between 170 and $2. I don't know that holding on through these volume shelves right here to get up to the 350 would be fantastic. But, you know, in my mind, if you bought it here at 117 or even 150 or so, I'd probably get out at about 225. I think once you cover that gap, I think you're good. Okay. Let's see. I'm going to start it up now. If you are here, by the way, hit the thumbs up button. Make sure you are subscribed. What you're looking at right now is TrendSpider. I have a 20%, 25% off discount in the link below. Sign up. I give you access to my algorithms. I give you access to my scans. I give you access to everything that I use. Watch lists, which include the core portfolio that I recommend having. It's just a list of stocks that basically you can trade, you can own, you can do whatever you want with. But we've had a lot of success lately, so I think I'm garnering some people watching. But hit the thumbs up button. Make sure you are subscribed. There is a newsletter as well, so you don't have to listen. You don't have to watch every day. You can get it in your inbox every day for free. I don't charge anything. All that I ask is if you make money, tip me. And if you don't, I don't care. You know, still listen for free. It doesn't bother me. I like doing this. So I got some folks who are emailing me consistently, pretty regularly. I mean, on a daily basis. Hey, Gary, want to grow your social following? No. People will find me. When you make money, people find you. I do this for fun. I don't do this for money. But I do appreciate when you make a tip because I don't charge for this. And we've got some thunder, so let me move the dog bed real quick. I know it's just thunder. Come here. Okay. Come on. You can stay right there. If you want to go under, you just can't. You can't cry and jump on me. I love you too. But you can't cry and jump on me. For those of you in the private Facebook group, I will post a picture of what I'm looking at right now. Let's see. No, stop. Discard. We're going to post. Bum, bum, bum. Recording. Return. Share to Facebook group. Post. If you're in the Facebook group, you can go and look at what I'm looking at while it's thundering outside. It's thundering and lightning here. So hopefully I don't lose power. If I lose power, I will come back on. But I'm going to start this podcast now. SPY. Let's see. Are we still? I mean, God, we still have so much confirmation on SPY. Weekly. Yeah. I mean, like I said, about 465, I think, is the next leg up. I mean, you got this one at about 430. We passed 430. You got 465, 470. There's a lot of thunder out there right now. I'm glad I cut the lawn yesterday. Whew. Okay. D-Man, welcome. Listen, Onan is a great one. Hey, and by the way, I'll look at Siri for you as well, D-Man. I don't know if you read the comment, but I was a serious subscriber because I'm a Howard Stern fan, longtime Howard Stern fan. I am not a super fan now, but I was. Daily listening. I love you. I love you, and I know. Don't worry, it's not that scary. Come here. Daisy, under here. Come on, little girl. Daisy, come here. Hey, come here. No. But I was a super fan and still love the old shows. But as they started to charge me, I found that I wasn't listening to anything else on Sirius just because I wanted on-demand stuff. So I'll look at it, but I'll talk a little bit about it in a little bit. Okay. Good morning. It's Wednesday, June 14th. It's hump day. I think I announced it yesterday that it was hump day. It wasn't hump day. Today is official hump day. First off, thank you, everyone. We got our Spotify 4.9. Thank you to everyone. If you don't know what that means, if you listen on Spotify, you have some stars that you owe me. Just go up to the top, hit the 5 stars. I'm at 4.9 again. I think some people rated me. I don't see a breakdown. I don't do this like as a social media guy or anything, so I have no idea what any of this means, but 4.9 on Spotify was kind of what I hung my hat on. So if you're listening on Spotify, go over there. I didn't see any increase in Apple Podcasts. I think 22% of you guys listen on Apple Podcasts. So if you could go over there and do I think you have to go into shows and then look up my show, and then you can put a 5-star in there and write a review. It's great. But I want to thank everybody for that one. That meant a lot. If you're on the other thing that I'd like you to do is share the newsletter. I think the newsletter actually gives you a pretty good look at some stocks that you want to buy. And I put notes in there. I don't do an in-depth every day. When I am not doing the podcast, I will do an in-depth. That's my promise to you guys, is that you'll at least have somewhere to get an insight into kind of what I look at. And not that, rule number 1 of this podcast is don't listen to a douche on the internet. I am that douche. So whenever you get something that, somebody says, oh, there's a hot stock and stuff like that, or even I send you a newsletter, do your investing at your own risk. We have done really well yesterday. I want to thank everybody for the tips. Yesterday was a good tip day, so thank you guys. I really appreciate it. And again, I don't charge for any of this stuff. Everything's for free. The only thing that you get charged for is if you want TrendSpider. And TrendSpider doesn't come for free. It's about $400 depending on the discount that you get. But it's a tool. And I don't sell you a system. I sell you tools. So you have to do this on your own. The goal is that after a while, you just need my newsletter. You don't necessarily even need to listen. You can listen for, the anecdotes for what I'm going through right now, which is 2 dogs on the floor crying because it's thundering and lightning outside. But the tools that I give you are fantastic. I mean, TrendSpider is just an unbelievable tool. I don't trade without it. But there's a link down below to get 25% off. You get a 7-day free trial. It's an unbelievable tool. But thank you, everybody, for the tips. Thank you, And when I get tips, by the way, that means you guys made money. Because I only tell you to tip me if you make money. I'm not a guy who's going to make a living at this stuff. I'm not a guy that does this for anything other than just the happiness and the, teachers teach for low money. I teach just for the happiness of it. So let's talk about PPI, Producer Price Index. This is the cost of goods. So what manufacturers pay to actually produce the goods that you buy. That went down significantly faster than inflation, which was CPI, which was yesterday. That means when the producer price index comes down, hopefully overall inflation comes down. So that does give the Fed cover to probably pause today. The meeting is at 2 o'clock. You'll find out exactly what they do. I think they do pause. Honest to God, I think they do pause. I think we're up here. This is the weekly that you're seeing of SPY. Once we passed that 430 and we closed above 430, we're at 436 right now. You're actually positive on the day. The next little trough is up here. And make no mistake, that RSI line and that MACD line are saying we're a bit extended, but we're not done. In my mind, I think you come up here to 460. That's a good 10% from where we are now. It doesn't mean that we get there overnight. Doesn't mean that we won't come back down. But that 50-day is starting to turn positive. Trade the trend. So that one right up there, I think that 463 is your next resistance point. If we get past that, you're going up to 480. I mean, you're going back to all-time highs. The economy is just that strong. So let's talk about some stocks here. And then I'll get to, you guys kind of overwhelmed me last night with all the Facebook stuff. But Ulta. We talked about Ulta being an opportunity down here at 417. It's all of a sudden at 442. You're within this gap. You're going to cover this gap up to 483. Ulta got an upgrade, and the new price target is 520 from this upgrade. I think it moves back up here. Ulta Beauty, I think you can buy it at 440. Hold on for a 10% ride to fill this gap and to get back to the 200-day. That death cross was because of earnings, but like I said, any reaction in the market is an overreaction. 417 was the confirmation point to get back in. In the energy space, Shell announced a 15% increase in their dividend and a $5 billion buyback. It's up 2% to 59.76. This is in our energy names that we trade. I don't necessarily hold this one. I don't trade it. It's just one that came out in the news. It was a good opportunity. Now, one that I do own and I do trade is AMD. They had their chip event yesterday. They announced a GPU CPU data center chip that will be the only competitor to NVIDIA's. I think this one, Lisa Su, who is the CEO, fantastic CEO. Again, good company with good management, with good products and good earnings. This one matches it. The only problem that you have is you have run up so far so fast. 50% here. 50%. You're seeing that button hook. You've got this gap down here. I don't know that it's coming to fill this gap. You've got this tiny gap down here at 121. I'd like to see you buy this more closer to 110. I don't know that we get down there. And we talked about Tesla yesterday. When's the best time to buy one of these running stocks? Well, today, because it continues to go up. Tomorrow, you might regret not buying it. So long term, I would say you're probably fine buying AMD. Short term, you might experience some pain. I mean, look, this is the all-time high back here in 2021. It's 150. You're going to get back there. You absolutely will go and get back there. You can see on the weekly how perfectly that 50-day never did the death cross. It just bounced right off of it. Now you got the 50-day moving positive. You have the 200-day moving positive. You have the 9 and the 21 moving positive as well. So it's all up from there. AMD is up slightly today. It was announced that Amazon will be using AMD chips for AWS. That's from Reuters. So Amazon, another good stock at 125. I think you get this one closer to 110. I think this 117 right here, 115. I think that's probably a decent entry point. Again, I'm just concerned that we're going so far, so fast. But again, for long term, if you're looking, when's the best time to buy? It's today. I mean, just don't look at the price for good companies with good products, with good management and good earnings. Tesla. We are on day 14 today of Tesla winning every day. It is down 1%. Is today going to be the last day? Listen, if you're Taylor Swift, her lucky number is 13. So if you're a Swiftie, I just know this. I mean, honest to God, I've had so many kids friends stay at my house for Taylor Swift concerts that I just know this stuff. Her lucky number is 13. So Tesla, we're going on day 14. Remember, Tesla has basically levered ETFs. TSLL is a 1.5 time levered ETF. This is a bull. So when Tesla goes up, this is times 1.5%. So here you go. May 1st, $8.80. You've doubled your money up here at 17. TSLL. Now, as Tesla starts to pull back and you want it to pull back, maybe you look at getting into TSLQ. This is one, there's several out there, but this is a short, a bear of Tesla. So when Tesla goes down, this one actually goes up. People have lost billions shorting Tesla. So I would be extra careful with this and have your stop losses pretty tight on that one. Google, which is in our core portfolio. This one, the EU announced charges on anti-competitive practices on their ads business. They hinted at a forced breakup. You can only hope that Google actually breaks out that ad business, because I do think that's the profit engine of this company. And if you want to own something, it's that profit engine. The rest of the company with AI and stuff like that is great. I had a friend actually go through buying a house, and the offer letter was sent in, but the offer letter kind of seemed like it was off of LegalZoom. And so I was like, okay, let me see if she's covered. I loaded the letter into Bard. And Bard said, well, you're not covering this, you're not covering this, you're not covering this. Dude, if you're not using AI for some of the stuff in your everyday life, you're absolutely crazy. You're missing out. Google, I just don't see this one breaking down too much. If you get down to this 113 level and you come back down to this this gap right here, just buy it. Just buy it. I mean, the RSI is dipping. The MACD is going down. What you're seeing here, see that MACD going down, but that price is kind of just staying in the middle right there. That's called capitulation. That is called divergence. That is creating a platform to bounce up on. So if you get it at 120, great. I'll probably be adding more to this one. Logitech, LOGI is the symbol. This is fishy. Now, this isn't one that I've covered. But the company announced the departure of their CEO to move on to bigger. But this is nuts. It's down 12%. It's at 56. It's under its 52-week. This is a company. We talk about a good company with good products, with good management, with good earnings. This is one the management might shake up. And you can see June 14th, Citigroup downgraded, Biden neutral, $70 price target. You're trading at 63. The average target price is 65. It's up 2%. Over 1 year, it's up 15%. Its PE is a little stretched. I don't think it's crazy to think that this reaction is an overreaction because the CEO just leaves. There's an interim CEO, might be announced. I just want to bring it up because on this a 4-hour chart, it's under its 200-day. Probably doesn't belong under its 200-day. So if you use Logitech devices and you like them, I don't. So I'm not investing in it, but I think they do have some really good products. PayPal and SOFI, both upgraded by BTIG. PayPal, what they said, shares are just too cheap. I've been saying that since $60. You're almost at your 10% if you got in at that $60.84. When you get to that 66, I wouldn't sell. I think it's coming up here to 69 and 75. I think it's going to start to cover that gap. That 50-day, that blue line is starting to move horizontally. You're starting to put in that what I talked about, that capitulation. The only problem is that the MACD is kind of putting in forward there. It might cross down. You might get back down here to the 60s. But I don't think if you're looking at PayPal for the long term, I don't think it's a bad place to add it. I do think that you have 10% in that one. SOFI, they announced that SOFI, they're rising deposits and their diversified revenue streams. They like this one. In fact, let's see. Did they up their price target on SOFI? I don't know. Let's see if they did it. June 14th, BTIG, buy $14 price target. You're trading at $9. It's a big move. Now, if you got this May 18th at $4.95, you've doubled your money. In just 1 month, you've doubled your money. If you saw that coming, high five. I better get a $500 tip on that one. Even if you only made $1,000, I better get, take your taxes out first and then give me half of it. But no, honest to God, I didn't recommend this one. This was one I told everybody to be careful about at $6 or $7. It's at $10 now. It crossed the $10 mark. Crazy. I think it's fairly strong. I mean, if you want to know the truth, I think it's fairly strong. I just, again, if for some reason the Supreme Court upholds Biden's, allowing them to waive the student loan stuff, I think you see it pull back. I don't think at $10, I think you got a $13 to $15 stock there, though. Enphase, we talked about this one pulling back to 161. I thought it was crazy that it's pulled back this much. I think it's starting to rise again. There's no news on this one, but you can see I don't think it's getting down to that 150 mark at the 200-day. I think you continue. I would like to see just a confirmation of this one before you get back into it. You're confirmed right now, but it's kind of just hanging out on that 9 and 21. So I would wait to see probably a few days on this one. Sedge. We talk about Sedge all the time. This is one that $300 price target. It's at 281. You don't have confirmation. You're out on this one. But I think it might come back down to this 268. If this gets to 268, just buy it. I mean, honest to God, wait for the algorithm to buy it. That yellow line that you see, that's $300. You can buy this under $300, and rest assured, at some point in time, it gets back above $300. C3AI. I talked about the AI train. This is a stock that is crazy. So this is the gap, the falling down here is when Hindenburg Research basically said, hey, this is a scam company. Well, AI is this strong. This company has done nothing right. Nothing. They were a different company. I think they were an Internet of Things company. First, they were an energy company. Energy went out of phase. Then they were an Internet of Things company. That went out of favor. Now they're an AI company. So I do not think that this company is very good. It's a trade. But it's at $42. If you got in May 1st at that 18, you've doubled your money. You've more than doubled your money. I mean, just crazy stuff. But I wanted to bring it up because it's there. Mara, which is a crypto miner. This is putting in capitulation right here. It's under 10, but it's putting in that kind of platform. Now, it's just sitting there. I mean, it's doing what Bitcoin's doing. It's just kind of sitting there between 25 and 30,000. And this one, Mara, sitting there between $9.50 and $10. I think it's putting in that platform. You're seeing that 200-day moving forward, moving up. You're seeing the 50-day kind of just flat, not really moving down. The 9 and the 21, they're all putting in there. The Bollinger Bands are cinching up. Could see this one move to 12 or 13 in my mind. One that I personally own and needed to add more at 15 because I should is Cleveland Cliffs. 2% up today. If you bought at this 15.11, you've made your 10%. You've done really, really well. It's coming up to fill this gap at 18.64. I'm going to add to my position. I think this is the run that moves it up to that one. You're seeing the 50-day move positive. The 200-day is moving negative still, but as long as we continue upward, I think you're seeing this one. Now, would I get into this one with a new position? No. The RSI is at 78. I think you could probably get this one in the 16s on a pullback, maybe even later this week. You know what? If the Fed raises today, maybe we pull back to 15 and 16 on this one. So just be careful of this one. I do have a position in this one, and I like it. Okay, now I get to the 10 freaking requests on Facebook. I'm going to probably have to limit it. You know what? Maybe I'll start a daily. Hey, just put your comment below for me to look at it. But ARDX, Sam wants me to look at ARDX. Looks like it's going through higher lows and higher highs to me, but I'm still learning. ARDX. By the way, we're all still learning. ARDX, I don't even know what this company does. $3.31 was the buy. You're coming up to fill this gap. I would say that gap gets filled at 442, which would put you at 10%. The problem is that you're kind of seeing the button hook that I talk about. So at this $3.33, you saw this one kind of take off, and it had confirmation above that 9-day. So I think between $3.33 and $4, you absolutely had confirmation on this one. Now that you're getting up here, it's a little bit extended. Let's look at ARDX here. What do? They are healthcare, biotech. They are losing $65 million. They are up 41% year to date. The average target price is $7.08. The last Wedbush covered them on March 3rd, which was a while ago. They moved them from 3 to 6. November, Piper Sandler moved them from 3 to 8. So take that $7 with kind of a grain of salt in that nobody's really covered this one. They are losing money. There's a 9% short interest on this one. Insiders are selling. They're selling at 3. Not huge dollar amounts. I mean, you're saying $10,000. So it's not a ton, but they're selling at 1. They're selling at 3. For me, there's better places out there. I don't know that you necessarily want, if you're in biotech and you understand this stuff, kudos. But the AI train is going. That's kind of where I'm at. But here's another one that Highway Jones wanted me to look at. In December of last year, TGTX got approved by the U.S. healthcare regulators for its monoclonal antibody for treating patients with relapsing forms of multiple sclerosis. From what I've read, reading, MS treatments have a huge footprint in the pharmaceuticals, healthcare market. What are your thoughts on this stock? Thanks as always. I don't know biotech. So trading, getting that approval in November, it's what's called a catalyst. And that catalyst usually catapults stocks. And you can see when they got that approval, maybe this was it, November 9th. Right here on earnings. It went from $5.41 up to $8.31. That's what biotech does. When they get approvals, that's what it does. Now, since November of last year, you're at $27. That's 3 times what you were at. Do I think that it's an absolute? Look at this. I mean, from $15 here, March, it looks like March 21st, you had a 95% gain on the algorithm, which underperforms, by the way. The algorithm loses you 85%. Buying and holding this stock loses you 25%. Because here's the way to look at it. From a long-term standpoint, I mean, this just got approval, so it went up. This was during free money, and there was rumors of this. Yeah, it went up. So I don't know that it's a long-term. If we go over here to TGTX, to FinViz, and we look at this stock, they're losing $168 million. They have cash on hand of 89 cents. They have 140 million shares out there. So they don't have $168 million to lose again. They're going to have to do a dilution. So they're going to have to raise money. That's essentially what biotechs do. Is if they just lose money, they're going at this level, they will raise more money, and that will come down to $12 when they start to raise more money. Now, if the MS treatment winds up being true, then you got a 3, 4, 10 bagger in there for you. So I do think that one. I'm just not a biotech guy. I mean, I don't want one that's going to go up 300% and then lose 300%. I want something that's going to continue growth, which brings us to Richard asked me about Zim. I'm not a fan of Zim. This is an Israeli company that got some retail trader hype over probably 21, 22. And during the shipping crisis, when you had increased shipping, shippers were basically able to name their price, and people were paying it to ship their goods. That's no longer the case. And so you see March of 2022, this was an $80 stock. They were paying somewhere in the neighborhood of 80% dividends. It was huge dividend stock, and it was huge growth, and it just kept going up. But look at that long term. Do I think that this is a good company? No. Essentially, when they paid out dividends, you had to pay 25% in taxes because it's an Israeli company. I just don't see this one being a solid investment. You want shipping? Go FedEx. You want shipping? Go UPS. I just, you can say that I'm crazy on this one, and maybe I am. It's up 1% today, $13.52. You can go over to FinViz. They are making $2 billion in income. Dividend, like I said, dividend is 127%. But their dividends have been cut back because they're not able to charge. April, JP Morgan, overweight to neutral, $20.80. You know what? If you get up to $20.80 from $13, that's a great trade. For me, I just don't like this. If you're paying out 127%, you're not reinvesting in your company. The taxes also kill me. I'm not a fan of this one. I think it got some retail hype way back when, and I think that's what took it up. I just don't see that retail hype bringing this one back up. If it does, kudos to you. But I'm not a fan of this one. Remember, I'm a tech guy basically, and you're on the AI train. I always say this, there's better places to put your money, and I think there's better places to put your money. Right now, one of those better places is probably UNH. Ironically, this is, and I don't mean putting it in now. I had a $500 swing trade on this one. Under 500, buy it. I bought it at 485. I only added a small position, but that's the only position I've actually purchased. I think it was 5% of my lot sizements. So, am I getting out of this one? Probably not. I will probably buy more. I may get out. I just don't see it going down to 440s. What happened with UNH, and this is, Paul from Facebook, can you add UNH and Humera tomorrow? They both dropped off significantly after hours. I'm thinking since the market is doing good, people are moving their money out of the safe place. I'm just looking for your opinion. My experience with healthcare is that, moving money out of healthcare into growth when the market is doing well, that is pretty normal. That's not what this is. UNH actually announced of higher costs. This runs on Medicare. So when the government says, hey, we're going to cut costs, UNH goes down. When seniors start having more elective surgery that they put off during COVID, this is going to go down. This is just catching up to where it probably should be. It ran up here to $562, $600 stock. This is one, again, good companies with good products, with good management, good earnings. This one will come back. It will come back to 500. Am I buying it at 457? No. Run the algorithm on UNH. It is, in fact, you're still in at 480. That 480 price, you're still in. It is going to get you out. The algorithm has two things. It has MACD and it has moving averages in its calculations. This big gap down, that gap here from 460, wherever the morning candle closes, to 488, 490, wherever that morning candle closes, that gap will absolutely get filled. Am I adding to it right now? No, because I don't have confirmation above the 9-day. I use 9-day as my confirmation. I don't see it above there, so I'm not adding to it. I would hold off on it. With higher costs, you just don't know what this is going to happen. So UNH, Humera, probably the same thing, just not. Humera is even worse. I mean, Humera is down 11%, 453. I mean, this one just got destroyed. Probably the same thing. Any reaction is an overreaction. You're going to have that gap. You know what this one did? This one just basically double gapped. So when you buy this one at about 460, right now it's trading at 454, you're going to cover that gap up to 471. I like these. I just, Jim Cramer actually said something good. Rule number 2 of this podcast, if you're new, is never listen to Jim Cramer, but he actually said something good. The increased costs of for Humana and for the managed care companies probably benefits device makers like GE Healthcare. And he brought up, MRI stuff. This has a gap up here between 83 and 86. I think it goes to cover that one. It is expensive. GE Healthcare is expensive. It is basically a spinoff of GE, $35 billion market cap. They haven't announced earnings yet, so they will announce earnings at some point in time. It is up 33% year to date. This is a healthcare company that's up 33% year to date. You just started having the 200-day here. You're above the 200-day. You're not above the 9-day. The 9-day and the 21-day are moving negative. The 50 days moving negative. I would hold off on this one, but you're seeing a large amount of volume between 76 and 78. That's your volume shelf. So I do like this one. I think Jim Cramer is right that we could start to see a pretty good benefit here to these. Let me see. Oh, no more data. I'm looking for my volume shelf to move it. There it is. If we move this to its highs, you can see the volume shelf is kind of just there. People have decided 77 to 78 is that volume shelf. Christopher from Facebook. Hi, Gary. Thanks for the helpful tips. Any thoughts on Disney, Carvana? So my thoughts, I've been wrong on Carvana. I've been wrong on Disney. But Disney, I still say is a $100 stock. Buy it under 100. You got this $87 buy-in right there. You what? $94? What? 10% from May 31st in a month, in half a month? You're starting to cover this gap between 95 and 100. I mean, if you want to buy it at 94, I don't think it's a mistake. You have confirmation. Will we see that $87 again? Probably. Their costs are just out of line. But, part of what happened was when Apple announced their headset, Disney was one of the providers that said they'd be doing content for it. So is there a Disney-Apple convergence? Does Apple actually buy Disney? Maybe they inject some cash into Disney for some content. So I like this one. Again, for a long term, I like Disney. I just don't think you're going to miss on that one. Now, Carvana, different story. Carvana, I've been, everybody in the world has been wrong about Carvana. Every analyst had said, hey, it's going bankrupt. This ain't worth $7. Well, shit, you 3 times your money, but from $7. I still think you're in danger. I think this may be a short squeeze. I think, you never know when short squeezes actually happen. The short interest on this one is 50%. So it's just, they're losing $1.4 billion. It's up 414% year to date. Its average target price is $11. You're trading at $24. No way this is anything other than hype. So I wouldn't get into this one. Again, there's safer places to put your money. But as far as if you've traded this one, kudos. I haven't. But Christopher, that's just what I think. Hey, Gary, do you think NVIDIA, John from Facebook, do you think NVIDIA is a buy and hold, or should we trade it around $400? I want to hear your thoughts. You do what you want. I think this is when it's under 400, you buy it. I think as long as the AI train is going, when it's over 400, you just kind of sit back. You don't do anything. If you want to trim over 400, I don't think it's a bad thing. If you got in here at 200, say you got in here at 232, and all of a sudden you're at 400. Now, if you're in a retirement account, I would probably trim. There's no tax events. If you're short term, like you just bought it in February and you're over 400, I absolutely would not trim in a brokerage account. The reason is that triggers taxes. So you're going to pay income taxes, and whatever income tax bracket you're in, remember, it's marginal tax bracket. So say you only earn $40,000 of total income in a year, adjusted gross income. you're not paying any long-term capital gains, but your short-term capital gains might be 20%. So you're going to pay 20% just to pull it out from here when the AI train is still going. Could you come back down here to 257, 260? Absolutely. But you're putting in this volume shelf up here between 382 and 390. And so that's providing you support. I don't think that, me personally, I have it both in retirement and in my brokerage. Both, I'm just staying. Honest to God, I'm just staying. As long as this AI train continues to go, I'm just staying. Could I see it back under 400? Absolutely. I'm just going to add more. Absolutely, I'm just going to add more. So let's look at D-Man. D-Man, I was looking at swing play and I found something that looks good on charts. Ticker symbol SIRE, Siri. Double bottom and recent pop and retrace slap on the 50-day. SMA push up, hedge funds buying, high rank insider buyings too. Looks solid for a swing around $485. Let's look at Siri. I was a former Sirius satellite radio subscriber. I'm a Howard Stern fan. When the show kind of went into his basement and stuff like that, I kind of just tuned out. I didn't renew my membership. And I know a lot of people like that. This was a satellite radio service that was built on Howard Stern. They still pay him a tremendous amount of money. I know people who subscribe to Sirius in their cars. I know people who use Sirius on the app. I think it's just something that people get used to. From what I hear on the Howard Stern groups, they're charging about $5 a month. $5 a month is not a hell of a lot of money. There's not a hell of a lot of margin in that. Now, if you use it in your car, I think it's closer to $20 a month. So the margins on that are crazy, but the cost of that is that they have to have satellites up in the air. They've already got them. The costs obviously are coming down because they've already spent the capital. So this is more of an entertainment play. I don't know, like if you got in here at 354, you're doing pretty well. I mean, you're up, you got your 10%. I just see it, their costs are out of line from what I remember. This is a company that is making $1 billion. Its average target price is $444. I do think from the chart, you're seeing the multiple bottom right down there at about 350. I don't know that you're going to run up here. I don't know the catalyst that's going to get you up to fill this gap at 568 or even get you above the 200-day. Take a look at the long term. And this is why I say this. In recent times, they just haven't been able to make money. This was a pandemic play that actually got some benefit from the pandemic because people were at home, people were subscribing, people weren't driving as much, but they still subscribed. And then all of a sudden in the last earnings, something happened and it just got dinged. I don't know what happened. Check it out on here. You can probably read an article about it. But I don't see any upgrades. I don't see any catalyst that says it's going to move. I don't know what would make this one move. Is it that Howard Stern all of a sudden comes, they were promoting him coming back to the studio? That was their big campaign. I saw that one. It kind of fizzled out. So, D-Man, you've been right on a lot of things. I just don't know what the catalyst is that moves it higher. I think hedge funds are buying. I think there's high insider buys. We can look at insider buys down here. I don't see any. I see sales at 370. I mean, this is June 7th. It's not a huge amount. I mean, the options exercise was from Scott Greenstein, who got $30 million in he exercised his options at $4.44. That dude is not happy right now. I mean, he paid for $30 million to exercise those options at $4.44. That would be my only catalyst, is that this dude wants it at $4.45. Right now it's at $3.85. If you want 10%, maybe you get that one. Maybe he's managing to that. That might be your catalyst. So, D-Man, good luck on that one. You've had some great picks, I know, in the past. So, kudos. Let's go to the scans. We've been talking too much, I think. But scans, XLK, this is the technology. This is a scan. It got a secondary cross up here. You can see that the MACD is actually going down here. And then it crosses back up. That's a second leg. At some point in time, you probably come back down to these 150s within technology, but this is the AI trade. So it's hard. A triple levered ETF that trades on technology is TECL. This also, same exact chart, just levered. Imagine if you got in April 28th at $36 on a triple levered bull ETF on the technology. You're at $51 right now. This is great. This is great. I mean, this is a great, great stock. But TECL had the same thing as XLK. PanW, Palo Alto Networks. This is a secondary cross-up as well. I think you continue to rise on this one. This one recently got added to the S&P 500. I think it continues to go up. I think it's expensive. Just understand it is cybersecurity. All of that stuff is going up. We'll talk about a couple more. IGM. This is one that I personally own. It's a clean sector, tech sector, IGM. So I like this one from a long-term standpoint. This has been fairly good. I should have probably sold into this dip, but I didn't. Now I'm looking for it to get back to 440 at 389. I'm not adding to it. I have a ton of this. I just have not managed this one well in my IRA. I probably should have, but I didn't see the tech sector taking that huge leg down. I'm just seeing it under the 200-day. It's now over the 200-day, firmly in this. Get a decent dividend. Nothing crazy. mRNA, this is in our core portfolio as a trading stock. It's not one that you invest in. 128, and you're at 126. I just don't know. Again, this is kind of similar to Siri. I don't see the catalyst for this one. Is it the flu vaccine? This is kind of like a biotech in that it's going to pop on hype. You do have a gap up here between 160 and 172. Typically and historically, this one has filled those gaps. It has absolutely filled those gaps. You got your 200-day back here on the weekly in October 2022, and it's just under that 200-day. But it's been a falling knife. I mean, it's been a good trade around 150. So 126, I don't know. I'm not putting my money in. Triple levered ETFs, we had a secondary cross up on TQQQ again. TQQQ has just been one that has given back to people, 3, 4, 5 times. It's been one that you can hold on to in this bull market. It's still got confirmation. It's got that secondary cross up. You are way up here at 1.32 on the oscillator. I mean, that's just as high as it's gone. So the RSI is at 75. It's a little bit extended. UVIXY. At some point in time, the VIX goes up. And I don't know when it is, but the VIX is at 14 right now. You've got a reverse split coming up on June 23rd. This one got a cross up here at $2.24. This has been an absolute loser. Absolute loser. So I just have it in the list. It's one. If you want growth, VUG, secondary cross up here. This was the initial cross up was 251. You're at 277. This is the Vanguard growth. So it's super low cost. The fees are super, super low. Another spider sector is XLC, the communication sector. This has been crazy. I mean, for a sector to be in the 50s, 59, twice you've had a buy here at 59. You're at 64. So you got your 10%. You got your 10% in what? A little over a month on a sector, communication sector, a good one. ARKW. This is their web focused fund. $48 was the initial buy on May 8th. It's a secondary cross up. Now you can see it's just kind of put in its capitulation. It's not huge where it crossed down and then crossed back up, but you do have confirmation, and it's trading at $56. I think the play on this one for this year has been $50. Honest to God, I think you'll get it at $50. When you look at the volume shelves, we're going to pull that back. See, it's right here at 50. It's right there at 50. Another ARK fund, ARKF. ARKF got a cross up. This is fintech, the financial stuff. ARK is this is one that I would probably use ARK for. ARK ARC-F and ARC-G. I just don't know fintech very well. I don't know genomics very well. Those are the two funds that I'd use ARC for. But the RSI is super high. It's at 70. So ARC-F is one. Okta. I think Okta has a chance to cover a gap. And that's why I included this one. You've started to cover this gap at 75. It had a cross up here at $75. You're trading at 75.46. So it's not too far above that 75.15. Over the long term, I think this one has the opportunity. If we continue on this tech trade, Okta, I think, comes back up to this $90. Now, from a long-term standpoint, you can see Okta is well under its 200-day. It is an expensive stock. It's software. The PE, forward PE is 59. They're losing $691 million. It's a $12.38 billion market cap. Short interest of only 3%. It's performance year to date up 10%. But I saw that gap on the 4-hour, and I said, this probably deserves to be in here. SMMT. We talked about this one a few weeks ago when it was $1.51 because it got this cross up here to $1.48. Part of the catalyst that took this one up over 2 was because there was like a $500 million buy by the guy who basically started this thing. So it pushes it up there. I think at some point you get up to this gap at $3. It's slowly made its climb. It's got a secondary cross up here. If you're in $1.69, if you're in here at $1.48, kudos to you. I think Sherry took the trade. I think even Brandon may have taken the trade. Dow 30, Cisco was the only one that kind of got up there. It's a secondary cross up. The RSI is super high. You're coming up on your ex-dividend date on July 5th. July 5th. So, this one, under 50, buy it. Over 50, sell it. You're at 51.03. I just don't see a catalyst for Cisco. Rivian's an interesting one. It was replaced yesterday in the NASDAQ 100 by onsemi, ON. I think Rivian got a cross up here at 15.31. It's trading at 14. I do think this one is crazy on its valuation. It is not even worth $1 per share based on its current valuation and the current deliveries and the current problems that they have. But, and this is a big but, if they announce that they are going to the Tesla standard, Tesla charging standard, and Rivian vehicles will be able to use the Tesla superchargers, I think you see this one pop up to 20. Honest to God, I think it covers this gap between 15 and 17, and you could see 20 up here because that gap right here hasn't been filled. So I think you see this one pop heavy on news like that because Tesla has the chargers. Rivian doesn't have chargers. Electrify America sucks. So, but onsemi is, let me see, they're down 1%. Being added to the NASDAQ 100, they're going to get some buys. It's not going to move that needle too much because Rivian wasn't a huge weight in that. Zscaler. I wanted to point this one out. It's got a secondary cross up here. If you got into this one May 5th, I know I brought it up and I said, hey, this gap is going to get filled here. It was this small gap back then. It's gapped up since then. I don't know what the catalyst was, probably some pre-announcement or some cybersecurity company that had reported, but it gapped up here from 90 to 102. If you got in at 90, you're at 157 right now. It is super extended. I probably would not buy into this one. Do I think that it's going to continue up? From a long-term perspective, you haven't even reached the 200-day. So the highs up here at around 360, 380, somewhere in that neighborhood, I think you're going back to that. So it's been a crazy 1 month. So I just don't know that you necessarily get into this. Finally, Broadcom. Broadcom is going to come back to this candle. The candle high is 921. It will come back to that. Good companies with good products, with good profits and good management will come back to their recent highs. And you can see Broadcom, it has just been on a run. It's all-time high. is this 921. So it will get back to that. Do you want to buy it here? You could. Long term, I think you're fine. Broadcom is staying on with the chipset. So if you made it this far, hit the thumbs up button, hit that 5-star, go and rate me, sign up for the newsletter. Sponsors. First sponsor, Visible. If you're paying more than $25 for your phone service, sign up with the link below. You get $20 off your first month. It will only cost you $5. And then from there, it's unlimited service for $25. 5G service. It has absolutely, your boy here uses it for $25 a month. If I want the super speed, I go to $35 a month. It's not that bad. Again, the cost of this is super low. This is part of the reason why Verizon, why T-Mobile, why AT&T, it's a race to the bottom. There is rumors that Amazon is going to give you unlimited service for $10 a month as part of your Prime service. So if you're paying a lot for your phone service, I'd switch. There are a lot of providers out there. I've had them all. I've had all the low-cost MVNO is what they're called. Changing your phone service is like basically changing your oil. You go to a place. In this term, you go to the Visible website. You type in your phone number. You do it all online. 5 minutes, 10 minutes, 20 minutes later, Visible has changed your number over to the new service. So if you have an eSIM, it's super easy. It's getting simple. It is not a problem. I have switched over many friends, not one issue. Not one issue. I did have an issue, I think about 6 months ago, where Visible had a problem receiving and sending text to Android from iPhones. I got online. They reset my eSIM. Everything was fine after that. It was a long wait, but again, it's support online. So if you're one of those people who goes into stores, don't get Visible. If you're one of those people who just kind of never calls your cell phone provider and you're paying $50, $70, $80 a month, go to Visible. You'll love it. Second is TrendSpider. And if you don't have TrendSpider, I don't know what and you're trading a bunch, you're out of your freaking mind. It is about $400 a month. You need the elite level service. I give you a nice welcome letter with links. It's basically plug and play with all of my algorithms, watch lists, all of the scanners that I use. So it's nice. It's plug and play. For me, I was talking to somebody last night on Facebook Messenger about it. I probably spend between 10 and 15 hours a week on TrendSpider, maybe up to 20 with the podcast. But I do all my research on TrendSpider. So I essentially look at that stuff. I look at FinViz. There's 3 websites that I essentially use. It's TrendSpider, FinViz, and Seeking Alpha for charts to compare charts. In fact, if you listen this long, you'll get the benefit of this one. I've been looking at XLG, which is the NASDAQ 100, and AIQ. Those are the 2 that I was looking at. AIQ, great listener suggestion from yesterday. Look at the holdings on AIQ. NVIDIA, Meta, Tesla, Microsoft, Salesforce, Oracle, Adobe, Apple, Amazon, Alphabet. That's just the top 10 holdings. And you can see percentage-wise when you look at this. The weight, information technology, 63%. So I was looking at AIQ, and XLG. Those are the 2 that I was looking at. Well, look, year to date, 38%. The QQQ is only up 37%, so AIQ is actually beating that one. SPY is only up half that, 14%. XLG is up 25%. 1 year, it gets a little bit different, not much. It dinged me out. But you can do that yourself. So, okay, I've talked too much. I am heading out. I have my fireside chat with Kathy Woods at 3:00 today. So say a prayer for your boy that I don't get called on to ask a question. I'm going to be nervous. Hi, Miss Woods. How are you? She's a legendary investor. And I was in her funds. I made a lot of money on her funds. And then I wound up losing a lot of money on her funds. So I didn't manage correctly. And I believed her. I do think that she is an economist. She understands this stuff. I think the research that ARK does is amazing. I just think the setup of her publishing all of her buys and sells at the end of the day just opens it up to criticism. It opens it up to shorts. It opens it up to kind of manipulation in that fact. So I will ask her a question about that stuff if I get the chance. And maybe I'll screen record. So, okay, take care. I will talk to you guys tomorrow. Christian. Beetlejuice lives in Georgia, by the way. No, Christian. Her fees are 5%. So she's beating me by a long shot. I am beating her funds. I mean, let's look at the, she's beaten me this year at 45%. 1 year, it's up 5%. 3 year, I am beating her by a long shot. 5 year, that's my problem. That's my problem with Kathy is she's promised to double your money in 5 years. Well, if you bought 5 years ago, you're actually down 7%. 6.18. So, and let me look at tip ranks, D-Man. To see Siri. Oh, I gotta. I hate this website, D-Man. I hate this website. I can't deal with this website. Oh my God. Anything that is this slow because of ads. Oh, I said 400 a month. 400 a year. Oh well, I did a bad sales job. I don't know where to see all the insider buys. Oh, here we go. Insider trading. D-Man, these are grants. It's not buying. But I guess I got to see premium to actually see it. But I hate that website. Not worth it. Let me export this. By the way, nobody's listening to me talk for 53 freaking minutes and then going, oh my God, you said $400 a month? They do. Here. If we go to Sirius and we go to Insiders, add to visible column. I don't know. Can you see that? Is my head in? I see a bunch of awards. I see awards, but not insider buys. Ah, that's where you're seeing. But I'm seeing a bunch of awards, D-man. June 2nd, I'm seeing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 awards, 2 sales, one on June 8th, one on June 7th, one on June 9th. But I'm not seeing buys. I'm seeing awards all the way down. I'm not seeing any buys. And awards are not in FinViz. And TipRanks, I would agree, D-Man. If you've got a subscription at TipRanks, I do think that that's a good subscription, because that website without a subscription is just painful as fuck. But I do see, David Zaslav got 49,000 because he's on the board. Guy runs a fucking. This is how the rich get richer. Greg Maffei got 178 shares. I mean, these guys got 49,000 shares as board folks, probably. Carl Vogel. Yeah, these are all directors who got awards. And what awards mean is they're given the shares. Okay, let me move you over to Active Trader Pro. Properties. I don't know why it doesn't save this. There it is. Humana is down 12%. Okay. Jeez. Who texted me? No. Report junk. Delete and report junk. Anybody sends me a hey text and I don't have them in my contacts, you out the ball game. Let me upload to YouTube. Oh. Daniel Inskeep is back to live. Upload video. Select files. 614. And then we're going to go to bum bum bum. Oh. New episode. Is it still? Oh my God. Jeez. Let's go to Canva. And today's is Fed decision. Oh, and I've got 2 dogs on either side of me. D-man, I don't know. Uninformative. I don't know how Tip Ranks does it, but if you go to FinViz, you can see there's no buys there. I'm listening to Target, the CEO, address the issue today. But what I don't know is Tip Ranks probably just says uninformative may mean awards. It means they didn't pay for it, I think, ultimately. We're going to upload the thumbnail. What am I going to name this? Okay. No, it's not made for kids. We're going to create this one. Save episode. Hopefully that works. No. So an award is basically like an executive being given shares as a bonus. In this particular case with Siri, it was the directors. They all were given shares. As a thank you for their service. Douches. I mean, directors on a board get so much freaking money just to freaking be there. That's my problem with it is they don't have to do anything other than just show up to work. And you get paid a ton of money. Oh, it's so difficult being a board member. Whatever. Let's see. We're going to say Alta. Healthcare fall on okay. And we'll put our notes in. This is going to be a long note. Let's hope I don't have to trim it down. Nope, don't have to trim it down. Woohoo! Okay. Fed decision. Well, it's FinViz and TrendSpider are showing the same exact thing. It's just FinViz doesn't show the awards, but it doesn't sell the buys. But TipRanks is showing some buys, which just nobody else is showing. Yeah, and that could be it too. I mean, listen, I think at the end of the day, I think none of us are experts. You can just kind of guess at it. I'd have to do a little bit more research into it. But again, my thing is, D-Man, I just don't know if there are awards and they're given to the kitty's outside walking. If there are awards and they're given to directors, then they're not paying for them. And with all those sales at $3, I just don't know the catalyst to get it up. Uh, 6/14/23 update. Okay. We're going to publish this. Let me get all this. Copy. And then publish now. I have put the notes in. Oh, come on, post already. Okay. There we go. Next. Oh, I gotta add it to playlists. I forgot to do that. Daily podcast recordings. Done. Next. Publish. Let's see. Siri stock insider buys. Let's just Google that. Here. Here you go, D-Man. Just Google it. This is from the SiriusXM Insider Sales. Here you go. Number of open market buys, 31 over 3 months, 95. Number of sells, 6. Let's see. Acquisition, non-open market, director. I mean, these are directors who the price, look, it's 0. 0, 0, 0, 0, 0. These are sells at $3.70. These are all 0. So there are awards. Look at this dude. Got given Oh, he holds 1.8 million. He was just given 48,000. And this is off the Sirius website. I think it's Siri. No, I'm sorry. It's off the NASDAQ website.
Okay, I found this on the web.
Stop.
No, I'm sorry. It's off the NASDAQ.
Here it is. Siri, listen to me. But here, price 000. The last direct was Greenstein. Disposition, which is not acquisition, that's a sale. Yeah, I mean, I don't think they're misleading you. I think that it's just their labels might be new. But if you ever see stuff like that, I mean, you can just Google it. But see, I'm not seeing any buys. This is disposition, option execute. So, but yeah. It's just a matter of, Googling it. I don't think you're out of line in thinking that the bottom, like you called it there, is a bad one. I think that's a good call. I just don't know the catalyst that's going to move it up. So, set as podcast. Let me see. By the way, if you ask to join the private Facebook group and you don't answer the membership question, I'm not letting you in. So, let's see. I want to make sure. I do check it that we're not getting out. New post. Why didn't the damn thing post? I thought I posted the damn picture. Oh, it is. Is it there? Oh, let's see. I think I have to refresh. Cancun. Brandon. Oh my God, that's a nice room too. My little puppies. It's a good Facebook group. Look. It's a good group. I do get a little bit of crazy stuff sometimes, like HOFV. What's HOFV? Let's look. Hall of Fame. I never heard of them. But it's been a good trade. Let me get some water. Water. Hi, Penny. The daisy. The daisy. Okay. Oh, let's see. D-Man, you should be in that Facebook group. Hall of Fame. They're losing $46 million. I'll add it. What the hey? Thursday. And then I gotta go. I gotta go here soon. Thursday. Let's see. Who asked me? Could you take a look at HOV? Keenan. Let's see. HOVF. CVS. Drew from Facebook. I love when you guys put in. I'll add it to tomorrow. I will add it to tomorrow. Brendan's in freaking Brittany bitch is in Cancun. That's awesome. That is awesome. God, look at that view. How do you not want to go to Cancun now? And then there's my puppies. That's when the thunder started. Okay. Thank you guys for the tips. Thank you, Sherry, by the way. I got your email address. I will save it. I thought Gmail saves email addresses when I send stuff out, but I guess not. But thank you guys for the tips. Thank you guys for subscribing. Thank you for listening. I will be back tomorrow with an update on my fireside chat with Kathy Woods. Should be good. I'm sure I think that in the group there's like, when I joined, I think there were 200 people in the group. I think we're about 2,000 now. So, Geldwin. Let me look up your Geldwin, man. D-Man, like I said, you've had some great picks in the past. Yeah, look at this one. I mean, that's just a monster, man. I think you pointed it out when it was down here at 12 or something. It's great. You may have even pointed out when it was under 10. Cleveland Cliffs is back under 17, so you can get it at 16. I think the market took a little dive. Energy has taken a huge dive. Everything except for AI. Geldwin, Generac, GNRC. This was a pandemic winner that was an overreaction to the downside, but I still don't think that you've seen the bottom. But look, you may have seen the bottom. This is pre-pandemic at 115, 116. So you dip down below that, but it's still a good one. I'm off work every day. Yeah, this is just one that ran up too much. I mean, that's the problem is that you're still going negative on that 50-day. I'd be a little bit concerned. Look at that volume shelf right there. Most of the people are sitting here holding a large majority. And to get up here, you're going to have to add on above 130 for me to say, yeah, this is a great play. But, I mean, short term, it's been a good one. Let me see, the 4 hour. Yeah, 102 to 123. Nice 20% gain. That's great. Okay, I am out. Remember, there's a link tree down below if you want to tip. I thank everybody for that one. But maybe I'll hop on at 2 o'clock. Well, my fireside chat's at 3, but 2 o'clock might be good. We get to hear the Fed decision, and then Kathy comes on at 3 o'clock for my fireside chat. So, okay. See you guys.